Welcome back to another Explainer. I am so thrilled to have you here today because honestly, we're looking at a truly fascinating moment in the real estate world right now. If you've been keeping an eye on the headlines, you already know the housing market has been something of a roller coaster over the past couple of years. But today, we're going to completely cut through that noise. Our goal in this Explainer is to uncover the exact current state of the Bradford West Gwillimbury real estate market using some incredibly fresh data straight from April 2026. We're going to see exactly how big national shifts are playing out right in this specific community.
Okay, let's dive right into this. Here is our roadmap for today. 1. The national economic shift. 2. The Bradford West Gwillimbury overview. 3. Comparing April year over year. 4. The return of market activity. And 5. What this means for you. Let's get started.
Section 1. The national economic shift. How Canadian interest rates are really setting the stage here. You know, you really can't talk about local real estate without understanding the broader national economy first. Local housing markets just don't exist in a vacuum. They're heavily influenced by national monetary policy. So before we look at a single house in Bradford West Gwillimbury, we absolutely have to understand the financial weather system sitting directly above it. When we track the Canadian overnight interest rate, which is the benchmark that dictates mortgage rates, we see a very clear trend. Back in the early days of January 2025, we were sitting at a high of 3.25%. But by April 2025, the Bank of Canada had initiated a cut, bringing it down to 2.75%. Fast forward to where we are right now, in April and May of 2026, and we're looking at a settled rate of 2.25%. That is a full 1% drop over the course of roughly 15 months. And that steady drop has created a massive stage of financial easing. It's fundamentally changing how much house a buyer can afford.
Moving on to Section 2, the Bradford West Gwillimbury overview and the local impact of those macro trends.
So we've seen the macro trend of dropping rates, right? But how does a 1% drop in the national interest rate actually impact the pavement on a local street? Well, our local data comes straight from the official Toronto Regional Real Estate Board, or TREB, market report for April 2026. We're totally bypassing the rumor mill today and going straight to the source data. And for this explainer, we're going to focus specifically on detached homes in Bradford West Gwillimbury, simply because they are traditionally the most robust indicator of overall market health and buyer confidence.
And here is the key benchmark, $1,038,650. This is the exact average sale price for a detached home in Bradford West Gwillimbury in April 2026. If you own a detached home in the area, this right here is the current baseline for your neighborhood. But you know, a number in isolation doesn't actually tell us much, does it? To know if this is a strong number or a weak number, we need a little context.
Which brings us to Section 3, comparing April year over year, the proof of market resilience. We really need to analyze how our current April 2026 data stacks up against exactly 1 year ago. Looking back at the historical TREB report from April 2025, you have to remember that interest rates were hovering up at 2.75%, and honestly, the market felt very, very different. Now, what's really interesting about this slide is when we compare these identical seasonal windows, we see 16 sales at an average price of roughly $1.038 million back in April 2025. Fast forward to April 2026, and we have 25 sales at an almost identical average price. We are seeing the incredibly tight alignment in the price, right alongside a very notable jump in the actual number of sales happening. I really want to emphasize this micro detail because it is absolutely staggering. There is only a $413 difference in the average sale price of a detached home year over year. I mean, think about that for a second. On a major asset worth well over $1 million, the variance over an entire 12 months of economic shifting was literally less than the cost of a new lawnmower. For current homeowners, this proves that your local equity has remained incredibly secure and anchored, even through a year of major economic shifting.
Section 4, the return of market activity. Buyers are officially coming off the sidelines.
We've established that prices have been a solid rock of stability. But real estate isn't just about price, is it? It's about volume. It's about movement. And the real story of 2026 is definitely the volume. In April 2025, the market saw 16 detached transactions. But in April 2026, that number leaped to 25. And this brilliantly illustrates that while the price didn't jump, the action absolutely did. The market has fundamentally thawed out. Let's connect the dots here.
Going from 16 to 25 sales is a massive 56% jump in sales volume for detached homes. So why is this happening now? Well, it's because of that timeline we saw earlier. As the Bank of Canada eased the interest rate from 3.25% down to 2.25%, the math finally started working again for all those buyers who had been sitting patiently on the sidelines. The lower rates have successfully breathed life right back into the market, giving us this 56% surge in closed transactions. Buyers are actively returning to the playing field.
Finally, Section 5. What this means for you, with some actionable takeaways for homeowners. Because let's be honest, data without application is just trivia, right? So, the crucial point is this. 1. National rates are down to a comfortable 2.25%, creating a highly favorable lending environment. 2. Local detached prices in Bradford, West Gwillimbury are holding incredibly strong, with year-over-year equity virtually locked in place. And 3. Buyers are actively back in the market, proven without a doubt by that 56% surge in sales volume. Guys, this is the very definition of a healthy, active, and stable market.
Which leaves us with this final thought. We have a stabilized price point. We have increased buyer demand, driven entirely by lower interest rates. The gridlock of the past is clearly clearing out. So, with rates dropping and activity definitively rising, is your home ready for the 2026 market? If you've been holding off on making a move, the data strongly suggests the environment you've been waiting for might just have arrived. Thank you so much for joining me to explore these numbers today, and keep learning.